excited to go over some Q&A today. I know Val kind of teed us up and put some questions out there in terms of, what questions you all have moving into 2022. And I just wanted to make sure that ultimately, you guys all have the ability to, and not only the ability, but the mindset of what 2022 will hold. So I'll kind of finish with that. This may not take the full hour here. Val, are you with us on this call? Sure, Val is part of the deal. Do we have any questions in advance, Val, or are we just going to open it up? Because I know we got kind of a smaller audience here today. Where would I access those questions? I don't know if they were already sent to me or not. Let's see here. All right, question number one. I'm a broker owner and haven't had the time to dive into learning and implementing art of homeownership because I'm spread thin in my business. My first priority is bringing in new business. So what are some tips to finding the time to implement? And then what should I focus on with AOH in order to generate new business? Man, I absolutely love this question. So, Tim, I've been talking to a lot of brokers in the last year. And I think one fairly consistent thing, and this is not a sweeping across the board generalization, it's just a lot of times we find that brokers will operate with maybe just themselves and an assistant, but the team infrastructure oftentimes isn't there. I will tell you that this business, like doing loans, is not hard, right? It's just math and paperwork and really being detail oriented. But doing a lot of loans or helping a lot of families in a way that if you're an art of homeownership partner, you absolutely should, then that becomes really challenging because it stops becoming about what you can do. And it starts becoming about how many, what you can build to help people at scale, right? To build trust at scale with your community. And so I'm not sure who asked this, but for whoever did, the first thing you should do is not, your actual focus should be less about bringing in new business, and it should be on building your team. Because if your number one priority is bringing in new business, you're going to fail at it sometimes. Right? If you're really good at bringing in new business, but you don't have scalability, then it's going to be, you're basically digging your own grave, right? Because I always tell, one of my favorite things to tell realtors is, they're like, yeah, we like our lender, but they're inconsistent. Sometimes they're good, sometimes they aren't. And I said, look, it's not because sometimes they want to be good and sometimes they don't. It's because every loan officer is good until they're not. And the point at which they become not good is when the point where they've outkicked their coverage, right? The business you're sending them exceeds their capacity to handle that at a high level. So I think 2022, everyone's goal should be scalability, right? Build a team that allows you to ingest an infinite number of families to be able to help. And you have to put the cart before the horse here, right? Believe in yourself, right? Build the team, like hire your production partner one and go into the e-learning platform of the Art of Homeownership. And again, if you ask them this question, you're saying, what should I do first in order to focus on AOH? Well, first of all, use AOH, go into the e-learning platform, go into the team building section, and your first person you hire is a production partner, right? Second person you hire is a production partner two. Third person you hire is a loan coordinator. Fourth person you hire could be a biz dev manager or marketing coordinator, right? And then when you start getting to helping about 20 to 25 families a month, potentially even earlier, then you elevate your production partner two to a mortgage advisor. And that allows you, one of the things that I hear a lot from my team and from other people is that, I always seem to have time to look around the corner, right, to see what the market's doing and to iterate kind of the next version of where we need to go. And it's because I'm not stuck, in the business. I can work on the business. And I think we confuse ourselves a lot of times thinking when we're in the business, we're collecting conditions, we're pre-approving files, we're sending out pre-approval letters, we're closing loans, we're helping families. Like that is for many of us for years has been our zone. Now we talk about the 4 different zones. You have your zone of incompetence, your zone of competence, you have your zone of excellence, and then you have your genius zone. Most people never get to their genius zone. Right? Their zone of excellence is usually where they stay, which is where they can earn a good living and do things that not a lot of people could do. A lot of times they work in their zone of competence, which are things that are kind of helpful, but really anybody could do. And then hopefully nobody's in their zone of incompetence, which is things that you're just not good at and you'd actually break if you did too much. So getting into your genius zone oftentimes is really leadership and lead generation at a high and consistent level. So that would be my answer to question number one. If you want to implement Art of Homeownership, you need time to do it. Now, if you just go into the platform and you realize that there's that 3-step process, the first step is just being able to talk to clients about it, right? And being able to let them know what your unique value proposition is, right? So that would be the easiest lift, is just know how to talk about it, know what makes you special, know what makes you unique. I did a video yesterday that I'll be putting out. I sent it to Val earlier. It says there's 3 things you need in 2022 to be successful. You need confidence in your value proposition, knowing that you are selling a different product than the rest of your competition. You need confidence in your infrastructure, your team, right? That way you know that as you're going out telling people about your superpower, when the business comes in, your team can actually handle that. So you need confidence in your team or your ability to build a team, right? All the infrastructure, who to hire, when to hire, all those things. And the last thing is you just need confidence in your price, right? You have the economics of your business, right? Knowing that you're delivering a fair price and you have full transparency into all those things. So to answer the first part of that question, to tiptoe into the art of homeownership, just be confident in your value proposition, right? Be confident in what to say and how to say it. And the next time someone asks you what you do for a living, don't say you're a mortgage lender or a real estate agent. Just say that you're changing the real estate industry. If you guys have follow-up questions on any of this stuff, please raise your hand, type it in the chat, type it in the Q&A. Happy to help. All right, second question. When do you know a client isn't going to value AOH? I have some high income earners, financially savvy clients, and some don't get excited when I tell them about AOH. Do you have something you listen for to know it's not a good fit and time to move on to another client who values what we offer? Love this question. It's a question we get often, so thank you for whomever asked it. I think it's a story that we're telling ourselves, however, because your interest rate is not any higher because you offer Art of Homeownership, right? Like, they're not paying for this service. And so whether they believe they will value it or not is probably more of how you've explained it and less of how they've perceived it. So let's assume that I'm talking to Joe, right? And Joe is a multimillionaire, owns 13 properties, does great, earns a ton of money, has a financial planner, has a great CPA, has his estate planning in order, really has great people watching over him. One thing I'll tell you is what Joe doesn't have is anyone watching his mortgage. No one's managing Joe's mortgage, or mortgages for that matter, right? He's doing that on his own because financial planners don't do that, right? Another thing that Joe doesn't have is Joe doesn't have anyone helping him manage his real estate portfolio. And I'm not talking about like a property manager. I'm talking about the strategy behind his real estate portfolio. Is he over-invested in real estate, right? Does he have too much of his portfolio in one sector? Is he under-leveraged in real estate? Does he have not enough, right? Does he, if he has 75 or more percent of his net worth in real estate, he's probably over-invested. If he has 10% or less in real estate, he's under-invested, right? So how do we show Joe value? Is we fix the problems that he doesn't know he has. And so I said, Joe, we're going to do all these things. By the way, he also doesn't have a home concierge. Probably promise you that. No one's helping him fix his home or manage it or keep that in good shape. Right? No one's giving him the analytics on his house each month. Right? He's not getting a real estate wealth digest. So I would focus on the before, during, and the after, same way we do always. First thing I would tell Joe is, hey, Joe, look, one of the things we do is we offer what's called the Art of Homeownership platform to all of our clients. And the reason why most of our clients use us is not just because they want to own a home. It's because They want to become successful homeowners. They just don't necessarily know how to do that. Now, it's obvious, Joe, you've reached that level of success, right? Like you're in every measure from a financial perspective, you've reached that level of success. So I'm not going to try and solve for a lot of the things that you already have in place, but a couple things you don't have in place is likely nobody is managing your liabilities. If I had to guess, is that correct? Like, is anybody actively managing all your mortgages for you to ensure that they're always in the right place at the right time and you're leveraged appropriately for all of your real estate? No one's doing that. Okay. Now, also, is anybody actively managing the strategy behind your real estate portfolio? Like when you should buy, when you should sell, 1031 exchanges, some of those types of things. Like, are you kind of doing that on your own, or is anybody helping you with that? Oh yeah, me. I kind of talk to my financial planner about it sometimes. Okay, well, just so you know, most mortgage companies don't do either of those. We do both, right? We also do a lot more, but I think the most important thing for you is to know we're going to do those things, for the next 30 plus years. We're also going to help you get your offer accepted. In Orange County, there's 1,400 homes for sale right now. It's 3.3 million people in the county, right? And people all over the world want to live here. And 1 out of every 6 people buying a home right now is an institutional investor. It's Wall Street. So, typically you're going to have less than a 10% chance of getting an offer accepted unless you wildly overpay for a home. We have a 72% offer acceptance rate without you having to overpay for the price of the home. So we're going to help you get into this property appropriately. We're going to structure it to make sure it's in the best interest of your overall financial and kind of holistic financial picture. Here is our process that you're going to go through, right? We're going to allow you to experience the joy of becoming a homeowner, not just stress and anxiety that most people have. And then we are going to be an advocate and a consultant for you from a real estate and mortgage perspective. And we're going to work very closely with your financial planners and your CPAs to make sure you have a really well-rounded team. So somebody please tell me how Joe is not interested in that. Unless he believes that he's overpaying for something that he doesn't perceive valuable, right? In the absence of value, cost is the only thing that matters. So you just told him how you're going to help him get an offer accepted and help him strategize. You're going to help him have a phenomenal experience. You're going to talk about what you would talk about if you didn't have Art of Homeownership anyways. And then you're going to add the AOH kind of, sectors of what you have there. Pinky's asking a question. Yes, what if rate is higher than the competitor? I'm going to give you a little bit of spoiler alert. Your rate is always going to be higher than the competitor. Always. You just have to know that. Know where you work. Unless you work at better.com, who's losing $100 million a quarter, right? Like your rate is going to be higher. There's brokers out there that are doing loans for 50 basis points right now, just to keep the lights on. Right? There's mortgage companies that are operating at a loss just to keep their people, hoping that 2022 rebounds. Like you're never going to be the best interest rate, nor do you want to be. Lean into that. The second you are concerned about someone else's interest rate being better than yours, not only are you going to feel it, but the client is going to feel that energy. So just get rid of that. I don't care if you're the cheapest broker in the market, somebody can do a loan cheaper than you. And somebody will likely do that, especially in today's environment, right? Where we're in pretty decent margin compression. So lean in. I almost start every conversation by saying, hey, do you know, Joe, I'm glad you were referred by your financial planner or by your realtor. Did they tell you what makes us unique as a mortgage lender and what makes us different than the average mortgage company? Hopefully they say yes, right? And that means you've really trained your referral partners well and you guys are working well as an entity. But if they say no, you want to hit it right in the head. Be like, okay, well, I'll explain more of this in the consultation. Like right now, we're just kind of doing the discovery call, but most mortgage companies just want to sell you debt and then wish you good luck, right? And everything else is really up to you. Our goal, Joe, is that we help our clients not just own a home, but to become a really successful homeowner over the next 30 years. And I'll explain more about how we do that. But it's just important that you know that people don't choose us because we have the most advertising or we're the cheapest mortgage lender in the country or any of that stuff. They choose us because we're the most valuable person in their life when it comes to real estate and mortgage financing. And I'm excited to talk to you about all that. John, the realtor, said great things and, said you're already, highly successful. So I'm excited to partner with the rest of your, financial team and your CPAs and everybody else to help you. But let me ask you some questions and let's get going. Anybody have any questions about that or follow up, or anybody else want to add anything? Or any other objections that you find in terms of rate or people not finding value in AOH? Okay. Next, what would you say are the three most important elements to business? Or no, sorry. What would you say are the three most important elements to implement in our business related to AOH in the next year? Love that question. Okay. Three most important elements to implement in our business related to AOH in the next year. So I'll probably just reiterate what I said in the video yesterday. And I'm going to try and think through it if there's anything different, but confidence is going to be the most important tool you have in 2022. And it can't bleed over into ego. It can't bleed over into cockiness, right? Because both of those things are highly offensive. But you honestly need to feel that of all the mortgage lenders in the country, 600,000 of us, that you are going to be the most valuable person to that client in our industry. And the same thing as a real estate agent, because I know there's a lot of realtors on the call. If you're a real estate professional and you can't, like, just saying it is one thing, but really believing it is quite another. Right? So having the confidence to go out and say, hey, look, like, I know who we are. I know what we do. I know what I offer. I know my differentiation. I know that I'm one of the most educated mortgage professionals when it comes to financial literacy and personal wealth in the industry. I know that the way that I will help you structure this loan and get your offer accepted is second to none. I know that the consumer experience you're going to have is going to be a 5-star client experience and more. And I know that for the next 30 years, we're going to help you and your family in a way that nobody else is going to commit to. And then be able to kind of explain that, like, that's the number one most important element to your business. And I would urge you all to practice this, right? Role play it. Find the most difficult person in your office or, person and have them give you objection after objection after objection after objection. And work toward, like, Mark Robertson, who's an Art of Homeownership partner down in San Diego, he talks about this a lot. He says, we went to a JOCO muster, where the leadership muster, and Navy SEALs train 99% of their life to potentially deploy into battle 1% of their career. The mortgage industry works 99% of their life and trains and learns 1% of the time, if that. And you need to put yourself in worse than battlefield conditions. That way, when you actually get on the battlefield, it's not scary, right? You're not a deer in headlights. So that would be the number one thing, right? Practice your delivery, practice your confidence, like, understand, like, you have a real superpower here. But if you don't believe it, nobody else will. Next is the team, right? Like, mortgage teams are you're either going to be a large mortgage company that does, like, call center, low rate table type stuff, or you're going to be a mortgage team that operates almost like its own entity. And, you can help as many clients as you can possibly scale to, right? But I've been in the position before where I was not confident in the team that I had. I wasn't confident in the lack of team that I had. I wasn't confident in the company that I was at for numerous reasons. And, like, because I didn't have those, it was really difficult for me to get out of my chair and go tell people why I was the best choice to help them with their home financing or to partner with as a realtor or financial planner or financial partner of any sort. I just didn't have that confidence in my execution. And so I just kind of took what came to me. Building a team of really talented, humble, hungry, and smart people is going to be the future of our industry. You're not going to have enough market share to sustain and to do the things that you need to do to compete with what's happening in the market if you don't have that, the ability to help a pretty high number of families. And just bet on yourself. I don't think about hiring somebody as a risk. Right? Like the only risk is if you don't do what you need to do when you hire that person, but they're not the risk. Your lack of ability or confidence or or knowledge of what to do might be a risk. But if you solve for that and you hire the right person, which is the right person is the operative phrase there. And if you're wondering how to do that, I mean, we have all of the job descriptions and job responsibilities. When you hire that person, I would encourage you do the initial interview and then have a panel interview behind you of people that they would work with or people you admire and get their opinion. Might have them do a DISC profile, have them take a kind of like a knowledge type based test. We have one that we give to people. They, in an hour, they answer as many questions as they can. And we really make sure we're hiring the right person that has the right drive and the right vision. You set the proper expectations, and the rest of it just is going to work, right? Because if you're a great hardworking person and you hire a great hardworking person, it can almost never fail as long as everyone's doing what they're supposed to do. So that would be the second thing is, really focus on the team aspect of what you're doing. That way you can be, more of who you are to more people, which I think is really the goal of Art of Homeownership is more people need to know what we do exists. And if you're only helping, 5, 10, 15 families a month, that doesn't serve you or the society as a whole at the best possible way. Like you playing small doesn't serve anyone. So, being able to have the confidence to say, look, I am different than everybody, like than other mortgage lenders. I have a value proposition they don't have. I have a team that makes me, able to go scale. Now I'm just going to go do that. And everyone that you come across will be better for it. I promise. Last thing I would say is the most important element to your business in the new year is the economics of your business. Right? The economics are being threatened by margin compression, by compression in real estate commissions, and a lot of online fintech type stuff. And the reason why I say this is not so everyone can just make more money, is because I believe that you need to have the economics to be able to reinvest back into your business. You need to be able to reinvest back into your marketing so more people know who you are and what you do. You need to be able to reinvest in strategic partnerships, to be able to, grow with the right people in the right markets. You need to reinvest back into team infrastructure. You need to reinvest back into, having a business reserve, right? Where, if 2022 and 2023 are going to be anything, they're going to be volatile, meaning that we're going to have really, a couple months where rates go low, a couple months where rates go high, and we're going to see a high volatility just because nobody knows where inflation's heading and what the Fed's going to taper to, and then the aftermath of that. So if you don't believe that you have the best economic model that will combine with your value proposition and your team structure, it's going to be hard to compete with the people that do. Right? And so really understanding kind of what that looks like and how it works. And that doesn't mean that you have the cheapest interest rates, because you could be a wholesale or a broker in wholesale, and you could, for 100 basis points, you'd be pretty damn near the cheapest interest rate. But that 100 basis point doesn't allow you to do the things you need to do to run a self-sustaining, really well-ran business. Quicken operated, the number one mortgage lender in the country by a country mile, operated off of 580 basis points in 2020. 580 basis points in 2020. Right. So, when you look at the margins you're operating off of and why you don't have your own Super Bowl commercials, you have to understand that, you have to be valuable and you have to be economically viable at the same time. If you get those three things in play, you can turn Art of Homeownership on steroids and, really do some phenomenal things with the platform. What's next, Val? All right. We had one partner asking general questions about trusted professionals on the website. Notice not many partners have them listed. So could you touch on what point do you list these professionals on your website? How do you find these relationships and be a good fit long-term? Love this one. So your trusted professional portion of your website is the easiest lift that you can make. I still have a standing bet. I still haven't lost it. if you meet with a CPA, a financial planner, a estate planning attorney, a contractor, a family law practice, and you tell them how you are changing the real estate or mortgage industry and what that means to you and how important it is for you to find the right partners that it speaks to and that believe what you believe. If they're the right partner and they don't decide to partner with you, I'll send you $100. I've never seen it not work, right? Because most of these trusted professionals rarely ever hear from lenders or real estate agents. And when they do, they hear the exact same things. And so what do? They just revert to whoever they golf with, right? Or whoever they, is in their club, or whoever is, in their BNI group, or you name it, right? Like whoever is just close in proximity, they're going to send their business to, because nobody's ever done anything different. So it's the easiest lift to get people to engage. Now, it doesn't always mean that they're the right partner. And sometimes it just takes trial and error to find that out. But there's things you can do to ensure that they're the right partner, right? You can ask questions such as, say I'm talking to Joe, the financial planner. So Joe, how many families are you serving right now in your entire database? Like how many families are you managing money for? People always tell you how much money they're managing. They just won't tell you how many. Like it's not typical they'll do that. So if they say, oh yeah, I'm managing about 10 families money for $1 billion. Okay, I'm not the right partner, right? Just not enough at bats, super high net worth. If they need to borrow money, they're going to borrow it against their assets in kind of like a leveraged account. So that's not the best partner. You come across someone, I'm helping right now, close to about 300 families that we're helping manage their money for. Awesome. Now, how often are you meeting with these people? Like how often are you proactively strategizing with them and helping them as their life is changing and evolving? The really good ones, once a quarter. The also good ones would be every 6 months, and at worst would be once a year. But if they don't do that, or you don't, get a feeling that that's like a high priority for them, then that might not be the best partner. And then another good question would be, so Joe, when you're managing, their assets, who is in charge of managing their liabilities? I don't really know. Well, that's who we are, and that's what we do, right? So when you see that, how often are you looking at people's mortgage statements to know where their rates are, and how are you kept up to date on kind of where the average rate is, and helping people understand if they could save money, or how they could leverage equity in their home for any particular consolidation of debt? What is your take on investment properties? And what percentage are you looking at in terms of like real estate assets versus equities assets? And you'll just start to hear the answers from people, and those are going to you just have to pick the right partners. And then ultimately you just say, look, my goal here, Joe, is that we offer our Art of Homeownership platform to your entire database, right? Because it's just an up level from what you're already offering them. And then it makes them much more sticky, because if they're calling B of A or Wells or Chase, that they're going to try and get them to move their entire portfolio over to save a quarter point. Obviously we don't, that's not going to be in our cards. So we want to help not only add more value to the clients you're serving, but protect them by keeping them in a sphere of people that actually care for them and are looking out for their best interest. And ultimately, every single time we have a client that needs help, my goal is that I'm going to refer that client over to you, and this is how we do that. I just want to make sure that you have a process in place, or we can build a process where, as you're talking to your clientele or new clients, that we can get looped into that equation and be the kind of manager of their liabilities. Does that sound good? Yeah, it sounds great. Awesome. Here's what we do. I'd love to add you to our platform. That way people can see you on there and we can kind of promote you. I only have 3 places that I can add, really for every market that I'm in. So I'd love to have you as one of our financial planners, and then you just simply get their headshot, their logo, and their information. We just posted right here how you can add them to the site, and then go from there. So I would highly, highly, highly encourage you all early in 2022 to fill out your trusted professional section, because it'll do a lot of things, right? It'll encourage you to go have conversations with people that you desperately need in your business anyways. Like what happens when the client, when you're having a an annual financial review, or when you're doing a post-closing call or a 3-month call, and the client says, yeah, I really, I need to figure out my taxes now that I own this home, or yeah, it looks like we have good disposable income, I need to figure out what to do with it. What are you going to say? Good luck. Hope you figure it out. Like, it's entirely our job to solve that problem. Now, we're not solving it directly, but indirectly by putting them in touch with our partners, it adds value to the client, it adds value to our partners, and it adds value to the value proposition of our business. So it's imperative these relationships. Like, you really shouldn't be an art of homeownership professional without them, because you can't holistically help people the way that you're supposed to, which is a problem. So hopefully that answered that question. Let me just make sure. I'm going to read it one more time. I'd put them on as soon as you can. Even if you started Art of Homeownership, I know we had a lot of people sign up in December, so there's probably a lot of new Art of Homeownership people that are going to be watching this. Make that at minimum a Q1 goal for 2022, if not a month one goal for 2022. Meet with as many of those trust professionals as you can in the first 30 days of the year, and not only watch what happens to your business, but the scalability and upside of your value proposition goes through the roof, and you'll just feel more confident. And then here's another tip too. If you haven't gone through your own personal session with these people, please do it. Right? Like, you should go through a financial kind of overview with each one of your financial advisors, and just be honest with them. Like, hey, I'm not planning on changing my or like moving over my assets or any of that stuff. I've been with my advisor for quite some time, and he's phenomenal. I love him, but I'd love to just experience like what advice you would give and how you look at people's financial situations, because I want to make sure that that as I'm referring my clients, I kind of have an understanding of what they're going to go through, and just make sure we're on the same page. And I'd also love to take you through our process. Again, I don't know if you want to buy, sell, or finance a home, and you don't absolutely have to at all. But I really think it's important that I personally walk you through our Dreams and Goals car, our consultation, so you can actually get a feel for how we engage with our clients. Because after we do that, we're going to be sending them over to you, so you just kind of need to know that process. I recommend doing that with every one of your partners. First of all, you're going to help a lot of them. Like, personally, you'll help them refinance, you'll help them buy a home and invest property. You'll give them advice and guidance that even as financial planners or CPAs, they may not have thought of, which really elevates you in their eyes. And then alternatively, if you go through their process, not only will you get to learn their process, but you'll get to learn a lot about what you should be doing and how people look at overall personal wealth and finances and taxes and estate planning. That means you'll just be that much smarter when you're having conversations with your clients. And that's how I've learned. So highly recommend doing both those things. Take each one of your partners through what you do, and ask each one of your partners to take you through what they do. All right, Steve's got a question here. What's the best range of real estate ownership as a percentage of total net worth, and why? Is it that simple, or do you measure it differently? Steve, is interesting. I was listening to a podcast yesterday morning. Jeffrey Gundlach, who's like considered the bond king, was talking about all the things that are happening in our environment and our economy right now. And he really believes that 25% in real estate is kind of a good number, and it could be positive or negative depending, but 25% in equities, and of that 25% in equities, probably 10% in foreign investments, just because the U.S. stock market is way oversold right now, and it's going to be hard to find value there. But emerging markets and foreign markets are really doing well, because the dollar will kind of continue to get devalued, especially through inflation and with our kind of our current economic policies. So commodities, right? He thinks probably 5 to 10% in commodities. He said 5% in digital currencies, but really as an insurance policy, because it's highly volatile and it could go to zero just as much as it could go, up another 1,000%. But it's really just an insurance policy, right? If we get a total devaluation of the dollar and people lose, that kind of monetary trust that keeps the dollar viable, or any currency viable for that matter, having that digital currency there will be a good insurance policy. Normally it was maybe 20% in cash, just for opportunities, right? Opportunities in businesses and investments and things that come up. But he'd probably move that down to closer to 10%, just because inflation is going to wreak havoc on any cash position that's not utilized. And so he was kind of going through that. It's if you want to watch it, it's Tony Robbins. Just look at Tony Robbins' podcast with Jeffrey Gundlach. It was really interesting, but thought that was a good one to look at. And everybody's going to be a little bit different depending upon where they are in life and kind of what their goals are. But I think it's a pretty decent number. All right, team. Any other questions? Any other comments? Anybody else want to know anything about art of home ownership or what you should be looking towards in 2022? All right. Well, I will leave you with this. Hold on. We got one more thing here. So we do not have a webinar next week. So enjoy your week between Christmas and New Year and rest and relax and, business plan and prep. And hopefully what I tell you here will help with this in a second. And then if anyone has any tactics or strategies that you've seen success with or will be implementing in 2022 with art of home ownership in business or general, please reach out to our AOH success team or just support at AOH and just let them know what you found helpful in 2021 or what strategies. We have really cool partners that they have municipalities that they're now working with. I think 13,000 people in municipalities are working with, different companies that they're now working with in corporate affinity partnerships. So I've been amazed at how successful the AOH community has been in multiple different areas. But what I'll leave you with is this, first of all, I'm really grateful. I was telling somebody just before this call, for most of my career, I felt very lonely. And I felt like I was really the only person in that I knew that wanted to change the mortgage industry for the better and change the real estate industry for the better, who wanted to make it more challenging to become a real estate or mortgage professional, to really drive more value than we are for the money that we make, and make it almost impossible for someone who wasn't a high value originator or real estate professional to be successful unless they were the cheapest. That was always kind of, for the last 5 years been my thing. And I've always felt pretty lonely. And it wasn't until we started Art of Home Ownership and found all of you incredible people out there who have the same heart and the same desire to change our industry that I've really found a reinvigoration for what we're doing. I've never been more excited to be in this industry. I've never been more opportunistic, or I've never had more of a clear vision for what we need to be doing for the next 20 years of my career. And I really hope that you all share in that, right? I hope that you can borrow my confidence and confidence from all the other Art of Home Ownership partners, because what we're doing is unique and it's special. It's not hard. It's not easy. Right? But the easy wrong thing is what our industry has been doing for the last 20 plus years. The hard right thing is to do this business the way that we know it should be done, right? To really not stop helping clients by selling them homes and loans, and start actually helping them by, fundamentally changing their real estate and financial trajectory of their long-term generational wealth. So first, I just wanted to say thank you, and I'm grateful, for this community growing the way it has in 2021. No doubt it is going to grow much faster in 2022 because people are going to realize that they can't just be the same as they always have been. And there's a lot of people who are burnt out, and that burnout comes from, really losing faith in your own story or not having one. And so, being able to storytell around AOH, being able to, to get people to understand that, 85% of people's wealth is in their homes when they retire, which is a real problem. Right? Like, the gap between the haves and the have-nots is widening at an incredible pace. Right? The average American household family, earns, I think, $60,000 a year combined. Like, that family is not going to achieve generational wealth without help, without guidance, right? Without proactive, consultative people in their lives who are giving them information to help them achieve wealth. So I'm just really excited and grateful to have you all on this journey. And more than anything, would love for you to continue to, spread the word in your markets and find other people who believe what we believe, because anyone who joins Art of Homeownership and does it for the right reasons will make us all better. right? We will just shine a bigger light on the discrepancies between the average loan officer and average real estate agent and the art of homeownership professionals who have committed to a higher cause. So 2022 is going to be the best year to take market share and to grow out of any year in the mortgage industry. You heard it here first. We have had 3 years where, as real estate agents and mortgage professionals, we've just had the market handed to us, right? If we were in the business for any decent amount of time, we just got more business than we knew what to do with. And I think the last 3 years has brainwashed many of us into thinking that we've earned that over the 3 years, and that it's because of who we are, what we do, as opposed to just what the market was handing us. And it's going to be really hard for people to redirect or change that energy into more of a proactive outreach and growth type mode that they were having to do in 2017 and 2018. They never had to do for 3 years in a row. They've made more money than they thought they would ever make. And it's going to be hard for them to go out and do the things they need to do to take market share in a market where market share is actually going to shrink substantially. Not us, right? Like, we have all of the energy and inspiration to go tell as many, like, I'm flying to Indiana to do art of homeownership presentations. I flew to Arizona to do it. We're going up to Washington to do it. We're going to Tennessee. Like, went to 5 hours up the road to Fresno. I'm going to fly all over the country and give art of homeownership presentations to real estate offices that I want to help them change the real estate market in their area. Like, that's how excited I am. And that's the opportunity that I see that 2022 provides, because nobody else is going to do that. They don't have anything to say. And where are they going to go to a real estate office and say, hey, we have rate, speed, service? Right. So you guys have a phenomenal opportunity to disrupt our industry as real estate agents, as mortgage professionals. And if you do it together, it's an unbeatable combination. But don't let the last 3 years make you complacent. Right. The last 3 years, we helped a lot of people save money. We helped a lot of people get into homes. Now it's our opportunity to actually go change the industry. We should have time to do it. We should have energy to do it. We have inspiration and fulfillment along with it. So use that confidence to go do all the things in 2022 that we didn't have time or energy or resources to do the last 3 years, and watch what happens for the next 10 years, because it is going to be an incredible run for those of us who are on the forefront of change. All right, I'll let you all go. And if there's any other questions, again, please email support team, and we will kick those off after the beginning of the year. But again, thank you all for a phenomenal year and for being part of this change mechanism with us. And I hope you all have a very, very, very Merry Christmas and a safe and happy New Year. If you need anything, reach out, and we will see you all in 2022.